Good morning. It is hump day, May 22nd. And listen, there's nothing going on in the market. There's FOMC meeting notes that will tell you how people feel about the rate cuts. But it's NVIDIA day. So the large majority of this podcast is going to be spent talking about NVIDIA, talking about NVIDIA plays, talking about options markets, talking about that. Snowflake and ELF also report today. Snowflake, I say buy it under 200, sell it over 200. I think you'll be fine with that one. ELF is one that has had some hype. It's pulled back recently. Target reported earnings this morning. They weren't great. So ELF is one of their main, that's one of the main sales channels for ELF. Is it good? They beat on revenue, but earnings per share, they didn't. So we'll see how that works. But the big news of the day, again, is just NVIDIA. So let's take a look where we are in the markets. The Qs, we still have confirmation. We're down 0.1%. It's negligible. It's like 20 cents that you're down, 5 cents that you're down on the triple Qs in pre-market. But you've got an extended MACD. You've got an RSI that is at 77. You've got tremendous overbought kind of indicators here and a downward trending volume. What NVIDIA will drive this market, whether they beat, whether they announce, hey, the Blackwell demand is going to be the biggest thing. We'll go over all of that, but it's going to drive this market. So what do you want to do today? I'd say sit tight. If you can get NVIDIA under 950, I think long-term, you're perfectly fine. I don't think we're going down to 700s. I don't think we're going down to 800s. I could be totally wrong. Listen, PanW was trading in the 290s yesterday. It came back to 311. So obviously there are bullish tendencies in the market. You want to know how to see bullish tendencies? Go over here to FinViz. It is 100% free. And this is what I used to do a large portion of the time to try and determine, okay, where are we in the market? Well, you look at the 1-year performance. It's bright green. Okay? You trim that down to 6 months. It's a little less bright green, but it's still green. So it's still good. You trim that down to 3 months. It's a little less bright green. And why is this? Because we're getting into an oversold market. You take that down to 1 month and it's super green. Super green. So for the long term, we're still super green. Midterm, we're still super green. You take it down to short term into the 1 week. We are still a little bit less than green. You take that down to 1 day. Well, it's kind of, we got to go over here. That's the 1 day. So it's a little bit worse, but we're still in a bull market. The charts say it, the colors say, everything says that we are in that. If you want to know what I'm trading, what I'm doing, it's dailystockpick.substack.com. Sign up for it. Right now, you've got, if you go to the link tree, you can get to the newsletter. It's the 5th one right here. The first one is Trendspider. All the charts we're going to go over today, it's in Trendspider. You have just a little bit more time left for this 65% off. I think there's 16 minutes. So when you're listening to this, it's going to be 60% off. But it's 60% off. So if you want a Trendspider, go and get it. Use the link tree. Sign up. Then you email me. And when you email me, I will email you back the 4-hour algorithm. I will email you back the 5-minute algorithm. I will email you the 65-minute algorithm. I will email you everything like that. How do I start my day? Well, one of the things I start my day with is this Seeking Alpha Portfolio Digest. And this is an email that comes out on the daily, comes out to me, gets sent out, and it comes here 3.6 out of 5. This is the core portfolio. This is the Daily Stock Pick core portfolio. If you haven't tracked it on Savvy Trader, go over to Savvy Trader. Look at my portfolio. It's on the link tree as well. You can go and look it. But what I really like is not necessarily this. It tells me that their performers right here, 6%. Eli Lilly was up 2%. Bank of America up 2%. Roblox, which we know we trade at 40. Shopify was down 3%. It's up 3% in pre-market. That's one. PanW was down 3%, but this was down like 11% yesterday. So it was a good thing that it was down 3%. And then you get these breaking news stories, and these are the ones that you want to do. And then you get full analysis. So this email comes out when you sign up for Seeking Alpha Premium. You can get 20% off Seeking Alpha Premium. How do you do it? You go to Linktree. You go over here to Linktree, and it's the second link, and it's 20% off. What do you get? You get in-depth analysis and analysis performance, 24/7 stock coverage, quant ratings. The quant ratings are really good. So go and sign up for that because I will go over a lot of that today. Now let's talk about NVIDIA. NVIDIA earnings won't just impact the stock market. The entire market is watching. What this says, this is just everything that making moves, the S&P, this is going to be it. I mean, NVIDIA is going to move this market. There were reports that Amazon was holding up their orders for the current chips, for the Blackwell chips that will come out later this year. That was denied by Amazon today. So we will see what the order volume is for the current chips because Blackwell is that big of a jump that people may be waiting for the Blackwell stuff. So if that's to happen, any pullback is a buy. NVIDIA's Blackwell will blow things away. Even OpenAI has said that. The power of these new Blackwell chips is going to be monstrous. Now, NVIDIA Q1 downbeat outlook would spread pain beyond AI chip makers. This is about copper in the market, and this is about some of the utilities with the power that go in. If you find that NVIDIA does say downbeat outlook and it would spread pain, I want you to buy utilities. I want you to buy copper. I want you to buy things that power the AI revolution, because just because NVIDIA is going down doesn't mean AMD isn't going to sell those chips. Doesn't mean that Qualcomm isn't going to sell the chips into the Microsoft computers that they announced. It doesn't mean that AI is done. So what you want to do is you want to take that opportunity on a pullback to buy what's currently strong. And if it's an upward trend, if you're seeing charts kind of like the Qs. So when we look at the Qs, what do we see on a weekly? We see lower left to upper right where we are in a bull market. And you're seeing this. You're going to see another cross up here on the weekly of the MACD. You're seeing the RSI go back to 65. Does it mean that, hey, we've got an opportunity to pull back? Yes. I've said this before, that this period between June of last year and October of last year looks very similar to what we're setting up with now. Look at how that's going up. Look at how this is going up. Are we setting up for a summer pullback that in October, which is a seasonally weak period, we're going to see a huge pullback and another buying opportunity? I don't know that buying opportunity is going to come at the Qs at 455. So if you're dollar cost averaging into the Qs, what you want to do is you want to use my 4-hour algorithm to find places to get in. It matches buy and hold. So you want to find 426, were you in? If you weren't, we are at 455 now. I have said this before, that the longer we go above 449, which was the previous high, the stronger that becomes support. So if we get a pullback, you may only see it at 449. If you're buying 4 shares of QQQ, because you got, a couple $1,000 and you want to put it into QQQ. That's what, $6 a share? It's $24. So are you going to wait for it to get back to 449 versus 455? No, just buy it. Again, we're in a bull market. That's the point of this. And any opportunity that you can see to buy it, you want to buy it. You want to hedge on NVIDIA? Here's an options play using an NVIDIA and SMCI. We talk about it. SMCI will move with NVIDIA. If NVIDIA says that, hey, we've got a huge opportunity in this, you're going to see Dell, you're going to see SMCI, you're going to see all of these other things move along with NVIDIA. You will see Microsoft, you will see Apple, you will see everything move with NVIDIA as long as they have a good outlook. And I don't see why they wouldn't have a good outlook. But you've got a crazy, crazy stock chart in NVIDIA. Let me show you NVIDIA's stock chart. Since we hit those lows back here in April of 744, we've gone straight up. That 744 right there was 756 was the actual low. But that 74.44 put in a nice support level that I drew, and I said that was the support that you were going to use to bounce off. Now, where are we? The all-time highs on this one, if we go over to NVIDIA on over here and we go to summary on Seeking Alpha, we can see the 52-week range. The 52-week high was, I think it's 1,050. No, 974. So it hasn't even broken the 1,000 mark. It hasn't broken the 1,000 mark. This might be the catalyst that gets it over 1,000. If you get a chance to buy it under 950 today and you don't have a position in NVIDIA, I think you should take it. I think you should take it. Doesn't mean that we might not pull back to this 50-day, which is 875. Doesn't mean that we might not pull back to this volume shelf right here at 912. Just means that I think you should take this opportunity to get into this stock. So, and if you want to play options on this, here's a great options play. I don't know about options. I will talk about, somebody asked me about Lululemon options, and I said I wasn't comfortable commenting on it, but if you want an options play, Seeking Alpha gives you an options play. It'll be in the newsletter. Go and do it. NVIDIA's results come a year after its blowout earnings helped spark the AI frenzy. This is an article just about, hey, this is NVIDIA's currently shares of NVIDIA held in 501 ETFs. Outlined below are 5 ETFs that hold the highest percent. Say you don't want to get into NVIDIA and you just want an ETF. SHOC, 27% NVIDIA. WUIG, 27% NVIDIA. So you have opportunities to get ETFs with exposure to NVIDIA. Not everybody wants to buy single stocks. So if you want to do that, just do that. You can look for these things. In fact, if you want to just, stocks given to you, Alpha Picks. Look at the performance of Alpha Picks, 122% versus 35% on the S&P. It's 2 data-driven stocks. How do you get this great portfolio? You go over to Linktree. It's the third link, Alpha Picks. That's it. So there's your NVIDIA stuff. I don't think that there's anybody telling you that this thing is going to go incredibly down. If we look at the Wall Street ratings on this and we look at the price target is 1,038. That's an 8.9% upside. Well, what is the options market implying? It's implying an 8% move in the stock. So you want to take a look at these things. That's what you want to take a look at. Now let's look at some crazy stock. BuzzFeed surges as Vivek Ramaswamy discloses a 7.7% stake. This is the kind of thing that you want to use Trendspider and you want to use what's called the A+ setup. And I have an A+ setup strategy set up in here. So if we go to, let's just go to Barnes & Noble's because that was the one yesterday. This one took off and it said, hey, there might be some private stuff. It's still running. Where did the algorithm, the 5-minute algorithm get you in? It was an A+ setup right here. MACD, low below the oscillator. RSI, coming off of oversold levels in the 20s. It's at 41. You have confirmation in the candle. The exit hasn't happened. Boy, where are you in this one? Let's see. If you bought this one at 26 cents, you are up 273% in one day. Using this algorithm, again, it's Trendspider. It takes emotions out of the trades. This is just an A+ setup. I have said this before and I'll say it again. I included this in yesterday's newsletter. Where do you get that A+ setup? Well, it's here in the newsletter. You just go to dailystockpick.substack.com. You can go here and you can import this strategy right into Trendspider. If you just go to yesterday's newsletter and you scroll down just a little bit, it's right here. Daily Stock Pick A+ setup. That's with FFIE. It was tested. Strategy performance, 43%. So that's just, again, the exit, and I'll say it again, the exit is a little bit tricky. Play with the exit. But this strategy, the entrance on it is really good to trade on a 5-minute candle. And you can look at this. It got you in here, 29 cents. It got you out 3.41%. 29 cents and it got you up to 31. Then it gets you out. It got you back in at 26. So again, Trendspider is a way to trade that. And that's Barnes & Noble. Let's go to FFIE because FFIE has been running. This has been running like crazy. It got you in at 127. Currently in pre-market, you're at 123. This might be done running. But if we look at the volume perspective during the days when it's opened up with big volume. This might be done, but over the course of the time, it's gotten you into. Now you may say, well, the algorithm didn't work; it didn't get you out. But look, it got you in at 155. Where did you go here? You went all the way up to $1.92. You could have gotten out when you lost confirmation. You went all the way up to 156, 157. You could have gotten out when you lost confirmation. Again, the exit is the issue. The entrance is not the issue. The entrance is absolutely stellar. So let's look at BZFD. This is BuzzFeed because this one is going nuts today. Where did the algorithm get you in? It got you in at 248. Didn't mean that you didn't go down to 243, but it got you in with an A+ setup. Now, say you weren't watching this, but you heard the news that it was 240. You could have gotten in with any of these confirmations above. Don't know what a confirmation is? Go over here to the newsletter. You can go down to the Education Center. And I've said this before and I'll say it again. I give a free 7-day trial. So if you just want to read these newsletters and not pay me, do it in 7 days. I prefer that you support me with a nice little, 1 month, 1 year, whatever you want. But again, the confirmation of education, you can read it in this bottom one. Confirmation, MACD, button hook algorithm. What do all these terms mean? Plus the indicators I use. It sets you up for all of everything that you see on the screen. Now, would I buy this one right now? Probably not. MACD is going down. RSI down at 55. Algorithm hasn't gotten you out. But again, we talk about just the entrance is the stellar one. Now, if you bought this one, say you bought this one right here. You had confirmation. So 281. In 5 hours, you're up 37%. That's a really good return. So find these opportunities and trade them. What I really like is my 4-hour algorithm. This is not one that you want to trade on the 4-hour algorithm. The reason is this is all hype. And yes, you could have gotten in there at 156. The algorithm outperforms the actual asset. The asset loses 85% over 2 years. The algorithm loses you 39%. It outperforms, it protects you. But when you take a look at a weekly chart, it's upper left to bottom right. You don't want to be in those names. You want to trade those names. Now, let's continue on with anything BuzzFeed. No, PDD. This is the owner of Temu. PDD up 8% in pre-market. It's up 4% right now. They killed it. Profit surges 200%. Transaction services drive revenue growth. I said it before. If you buy Temu, you should be in this one. The quant has it as a strong rating. If we go and we look at this one, just PDD. This is a China stock. China's on the rebound. China stocks have been doing really, really well. PDD is Pinduoduo. It's ranked number 1 out of 29 in the consumer discretionary. It's one of the top ones. Now, its valuation is a D, and I would argue the reason it's a D is because of the high PE. But when you look at Steve Kress's favorite thing, the PEG, which is forward, it's trading 58% against what the sector median is. So it's a good stock. In my mind, I think PDD is a good stock. Let's talk about Target. Target falls after pointing to consumer discretionary softness. I wanted to point out that I do own Target, still at quant, has it as a strong buy. It's down 8%. It's at 141. We can go and take a look at the chart on this one in the 4-hour algorithm. I think it's a $170 stock. I think their announcement yesterday about cutting prices on core of their stuff, this is to drive traffic back into the stores. They made it on revenue, but they missed on earnings per share. We can go over to Earnings Hub. Let's go to Earnings Hub real quick because I'll show you. Earnings Hub is my favorite earnings website. I'm not an affiliate of theirs. I have emailed them. It's from the creators of Savvy Trader. But if we go and we look at Target, you can see they missed on earnings per share, but they beat on revenue. That's not a hard thing to overcome. But when you're lowering prices to try and get customers in, that is going to be hard to overcome. So they're lowering prices. They're hoping that customers trade down. I think it's pretty good. Now, I wanted to point this out too. Remember, I took Target out of the core portfolio, and the reason was it wasn't performing well. So I did this chart. We're looking at Target, we're looking at Costco and Walmart. Costco and Walmart are both in the core portfolio. The reason is because these have lower left to upper right stock charts. They are good companies to buy. They consistently beat earnings. Costco, in fact, is close to $800 now. I bought it at $720 personally just a few weeks ago. It's not too high. They have earnings coming up. Will they announce a membership increase? I said when they announced a membership increase, it was an $800 stock. They didn't even need that to get to an $800 stock. You look over 1 year, they're up 67%. Walmart is up 33%. The XRT, which is the retail sector, which I would kind of put these in, is up 28%. So Target is the only one that's underperforming. There's a reason it's out of the core portfolio. When you go and you look at the year-to-date, Seeking Alpha having a little bit of an issue, but you go to the year-to-date, Walmart and Costco, 20%, 25%, XRT, 4%. You look at Target, it's up 10%. So you're still not down from where Target was, but as you pull in here, Target gets further and further away. When you look at the long term of these things, Target gets further and further away. So you want to make sure that you're in the right territory. That's essentially it. Don't make the mistake of getting into a retailer just because it's down. And you want to look at the 5-year. Target has killed it. Walmart is underperforming for the 5 years. So Walmart probably has some catch up to do. Target may be pulling back. At some point in time, Costco gets pulled back. So we can take a look at that. Lululemon. I got a question about an options play in the Facebook group on Lululemon. I couldn't do the option. I couldn't comment on the options play. I just don't feel comfortable commenting. But it was about Lulu, and the person said, I think it was Charles, said, "Hey, I don't. I have this habit of buying beaten up stocks with options. I'm not going to comment on an options play. What do I think about Lulu? I said there were 3 things. There's 4 things." You got a weak consumer, you got high valuation, you got an analyst revising down, and you have momentum is just horrible in this stock. Continues to lose ground as consumers' taste shifts, competition. I have said this before. I bought Lululemon knockoff pants for $30. Comparable pants at Lulu, $120. Do I think that they're the same thing? Exact same thing. Will they last as long? Probably not. But am I paying $120 for pants when I can get the same kind of material for $30? No. And that's the consumer choosing down. Until Lulu can actually get their consumer back in there and get their margins back up, you're going to see this stock continue to fall. It is part of the weak consumer. And higher for longer, whether you like it or not, is going to affect Lululemon. The momentum, it's a killer. It's just not doing well. The growth, B-. They're still growing at a decent thing, but take a look at the valuation. The PEG gap, which is the trailing 12 months, great. 0.32, 44%. But look at the forward. I mean, they just don't have the growth and the momentum to continue to do it. When you look at their, profitability, it's a great margin, 58%. But they're going to have to start selling, putting on sale. So that margin is going to come down. That's going to affect this stock. It is not, again, I don't feel comfortable talking about options, but I just have no hope for this stock whatsoever. When you look at the actual stock chart, we talked about, upper left to bottom right. That's what this is in. So do I think that at some point in time, this earnings gap gets filled? Absolutely. Is it time for that? No. I mean, you're at 306. The support level's 293. So you may still have room to go down. If we look at the weekly, you're just down around, you've passed that 200-day. Every time you've traded below that 200-day, it has provided a nice bounce. I would say this time's different. This time's just different. That's what I would say about Lulu. Google plans to bring ads in search to AI overview. Google's going to be one of the first ones to monetize this. They're gonna monetize AI. Whether you like the company or not, they're gonna monetize AI. It's a good one to do. Now, AI market, Microsoft's latest tools turn anyone into a software developer. Microsoft is at an all-time high. All-time high. So what do you do with Microsoft at an all-time high? Me personally, when I start to see weakness, I will sell. I do not think that the all-time high in this one right now is a time to sell. You've got too much hype on AI. You've got too much spend on AI. and you've got too much momentum in your favor. So I would say when you get above that 440 mark again, I would say you look to start to trim a little bit. If you need solace, sell one share. If you got 100 shares, sell one share. If you've got like 3-4 shares of this stock, just hold on to it. I would not trim it. I would say, hey, you really want to just hold on to this one. Now, we talked about Microsoft and Google. AllianceBernstein spotlights Microsoft and Google as quality AI picks going into the next second half of the year. These are stocks that you want to hold for the next 5 to 10 years. They're monetizing AI. We're in an AI and a GLP-1 market. So both of those are good. Now, social requests. Nick asked me about GCT. He said, hey, Kramer talked about GCT. What do you think? Here's the Kramer. I'll link this in the core in the newsletter. There's something off about Gig Cloud story with Jim Kramer. So Jim Kramer basically said, hey, GCT, there's something off about it. I would tend to agree. I mean, you look at this stock and it's just, again, we talked about upper left, lower right. Hold on one second. Hey, stop. So upper left to lower right, she's got her own bed. Dog's crying because she wants me to put the blanket over her head. She can get the blanket over her head. Algorithm has you out. Algorithm outperforms on this one. And I should have listened to the algorithm because now we're down, I bought this at 40. We're down at 27. Kramer brings up a couple of things. The short, the short report that was out there on GCT, Alpha Picks covered this in their, this is an Alpha Pick stock, and it's still rated strong on the quant. It shouldn't be a main portion of your portfolio. I do have a significant position in it that I'm down. I probably will buy a little bit more once it kind of flattens out. It's down 15% today, and there's not a hell of a lot of news on this one. Grizzly short report. This is another one. Gig Cloud dropped 13% after a grisly short report on the Chinese e-commerce company. Didn't respond immediately, Seeking Alpha email for comment. Now, Seeking Alpha analysts, the group, the Alpha Picks guys, they've gone to the warehouses. They've talked to the CEO. I don't know why they wouldn't respond to it. But it is down again. Has my outlook changed? Probably not. I mean, here's the thing. Jim Kramer repeated the short seller report. There's a new one today. That's why it's down. Jim reiterated what he saw in Seeking Alpha Premium, that only 2 analysts cover it. I've gone over this. There's only 2 analysts that cover this on Seeking Alpha or on Wall Street. And according to them, it's very cheap. But as they come out with more short reports, you've got to say something's up with this. And that's what Jim's saying. Do we want to, if you believe Jim Kramer, you are going to stay out of this one or you're going to get out. If you think inverse is true, let's just quote Elon. Let's tell Jim, hey, it's no Bear Stearns. I mean, again, I don't know enough about this company to say, yes, I am counting on the quant team over at Seeking Alpha, the Alpha Picks group, who has picked it, who has done a phenomenal job. Again, if you want to see the Alpha Picks portfolio, then, look at it, 122%. You don't go all in on a stock. And that was a mistake that I did was, hey, I really like this stock. It's lower left to upper right. I went all in, didn't think that there were going to be more short reports, didn't think there were problems. But all of that was outlined in the Alpha Picks report. Everything that you're hearing about the stock was outlined in the Alpha Picks report. I made a mistake. I thought it was going to continue to go higher. It didn't. I've got to reevaluate. Probably going to get out of this one. Maybe wait for it to settle down. Because when you look at the weekly of this has gone hyperbolic. I mean, you may get back to below 20. You may go back to the 50-day on this one. It's just gone hyperbolic. It was a crazy IPO. It was a crazy, crazy IPO that went all the way up to, let's see, $60. $60. Here you saw this one funnel up. It went to 18 before it dropped down to 10. So you've got some super volatility in this name. Now, from a weekly standpoint, look at how high that MACD is. Look at the RSI. So I would say I probably got over my skis on this one. May take the loss, just kind of chalk it up, may put my money somewhere else, wait for this one to settle down a little bit and pull back a little bit. Scott asked me about VRT. Small investment, just wanted to see what you think. VRT, this may be the reason you bought it. The real AI stock darling since boom isn't NVIDIA, it's Bank of America says it's VRT. VRT is let's see, I quoted this article. NVIDIA has been thrust in at the center stage of the AI investment, but shares of VRT, a data center equipment manufacturer, have outstripped the chip maker's blockbuster stock performance over the last year. Bank of America highlights Vertiv's roughly 300% outperformance of NVIDIA since the graphics processor maker units released its blowout Q of last year. So let's take a look at Vertiv. If we just click on VRT and we go, and what I really want to do, I mean, obviously it's a strong buy. A lot of this stuff is a strong buy. You're at an all-time, I think all-time, if not 52-week high. 104 is the 52-week high. But again, you look at this and it's an AI darling. I don't know if it's an alpha pick. I don't know if it's in that portfolio. Quant has it as a hold, and the only reason is the valuation. But what I want to do is chart this against NVIDIA. So I'll select the symbol. Again, if you don't have Seeking Alpha Premium, you can do a lot of this stuff without Seeking Alpha Premium. Just use my link. And if you decide to get premium, then, I get paid within 30 days or something. But when you look at 1 year, 500% against NVIDIA, 205%. When you look at year to date, VRT is outperforming NVIDIA. 6 month, VRT is outperforming NVIDIA. 1 month, VRT is outperforming NVIDIA. 5 days, VRT is outperforming NVIDIA. So you look at 5 years, and NVIDIA is blowing it away. But is VRT going to catch up to NVIDIA? That might be the thing. Again, you look at this, and the valuation is what's really kind of coming out and saying, hey, it's not great. But you look at the gap, the forward gap, and it's trading 59% below its industry sector median. Now it's 11 out of 68. This is electric components and equipment stocks. What's above there? You can see Powell. Powell is above, right below it. Powell is an alpha pick. I know that one. Let's see. I don't know these other ones, but you may want to take a look at these other ones. The valuation of CBAT. CBAT, I know nothing about this. I just clicked on it. Profitability is a C minus. Why? Well, they only have a 21% gross profit margin. Sector median's 31%. Maybe they have some pricing power that they could take. So CBAT might be an interesting one. Let's talk about scans. Some of the scans, MPLX, this is a core portfolio. The reason this one is a core portfolio, it puts off a 9%, roughly 9% dividend, between 8 and 9%. You got to buy here at $40.95. When it was up here at 42, I said, hey, you got to double top. It looks like it's pulling off. You may want to wait for it to buy to get down there around $40, $40.95. Again, this is a long-term buy and hold. You want to know why it's a long-term buy and hold? Lower left to upper right with a 9.34% forward dividend. That's it. We talked about POWL. This is in my personal watch list that you get when you sign up for Trendspider. So you get the daily stock pick watch list. This is one that scanned and it came in 127. And this one just got another bullish signal to go up at 184. Boy, look at that algorithm perform. For 127, you're up in 34 days, 43%. And you're double topping it again at 193. Do you want to buy here? I would say you wait to hold to see if this one gets over these highs. And the highs are, looks like 197. So do you want to, if that's your ceiling, then you probably want to just wait. If we just put this horizontal line here and we put it at 197.87 right there, and you put, that's your top. So you don't have much room to get to the top again. If this is going to go over that, you want to wait for that, because the upside is not that great, but it does get another leg up. Now, we talked about Duolingo. This is on the watch list as well. This is at 180.94. Now you're trading at 180.84. I would say I would not get into this one other than a trade. If you like this and you think that it's going to come up, I would trade it. Because again, any reaction in the market is an overreaction. but I don't like their business model. And when we go and we look at DUOL, this is Duolingo. This is a language model. If you've watched any of the AI stuff, they have real-time translation. So real-time translation may hurt this stock. Again, if Apple comes out with something on their phone, then this could be the opportunity that who's going to learn a language when you can have real-time conversation with somebody through AI. So Duolingo, I would trade it. I wouldn't necessarily own it. Chewy, Nike, Copart, leveraged ETFs, DRV. DRV is the real estate sector. This is the real estate sector bear. So we had Toll Brothers last night reported good earnings. You got the bear. Is the bear going to kick back up here to 45? Might. I mean, again, this is a 3 times levered daily ETF. So, the MACD is down below. Looks like an A+ setup to me. Are we going to go into a bear market in the real estate market? Maybe. I mean, rates higher for longer. You can see it's putting in this nice trading range right here between 36 and probably 65. Do we get back up there? Do rates, suddenly does June come and we don't get the rate cut? We won't get a raise on it. SDow, this is the short of the Dow. The Dow has been struggling to make gains versus the NASDAQ and the S&P. The Dow has been struggling. SDow, this is a ultra pro short triple levered against the Dow. Are you going to buy this one at 1588? I mean, the RSI certainly looks like it's about to come up. These are all decaying assets, by the way. So do not think these are investments. These are all decaying assets. You don't want to buy these and say, oh my God, these are going to continue to go up. No, these will not continue to go up. So take a look at the newsletter if you want to see more of them. If you just go to dailystockpick.substack.com, we'll go over here and we'll look at it. It is free during the week. Completely 100% free. You get all the scans. You get all of the news articles that I post. I do post, everything that I go over. You get, if you don't want to listen to me for an hour, 40 minutes, just go over here. And you can listen to it while you read, or you can pick and choose which articles you want to do. I sometimes throw a little bit extra in there. But if you want, the one thing that I would say is you go down to the end and you go to the scans. Because the scans are bullish in my 4-hour algorithm. And I kind of tell you, hey, this is one that I like. This is one that I don't like. So those are the ones that you want to trade. Again, this is just a suggestion for you. And if you want the education, sign up for it. Again, it's a free one for 7 days. Now, to support the podcast, you can do a bunch of things. You can buy Trendspider. You can buy Seeking Alpha Premium, Alpha Picks. You can join Webull and get 75 free stocks. You can just join my newsletter. Go and join the newsletter. You can get Visible service, Visible phone service. This is you save $20 off your first month. Well, what's your first month? It's $25. So if you're paying anything more than $25 a month for your phone service, you're crazy. This is the service that I have for $25 that you're seeing on the screen. Now, I don't go up to the 45. If you want better service, it's 45. I don't particularly need the better service. I do a lot of hotspot work using my mobile phone, unlimited hotspot. You get unlimited data, talk, and text. It's on the Verizon network. The Verizon network, I know you got those Verizon plans where you're paying $80, $90, $110 for your service. Why wouldn't you get the same plan for $25 or $45? It's the same plan for $45. Now, if you're at your house and you like, hey, I watch Gary all the time, and he's got AT&T Fiber. I do have AT&T Fiber. Use my link on Linktree. Right down here, AT&T, refer a friend. Fiber and wireless referral program. Go and get it. See if you're available for AT&T Fiber. You can see if you activate the AT&T wireless. But the wireless service, I personally get Visible. I don't get AT&T. I mean, my parents had AT&T. They didn't like it. It was a little bit. I love my AT&T Fiber. AT&T 1 gig service. It is unbelievably fast. I've never had a problem with buffering. Never had a problem with any kind of speed. It is better than cable. So as a former cable executive who launched high-speed data service in California, I will tell you the difference between the phone company and the cable company. The cable company, it is a shared line. Now, don't let that scare you, because typically they have very good lines. If you are talking with a friend and they ever say, oh, I can't see you, that is your upload. The reason is because cable doesn't have a symmetrical speed. They limit the upload versus the download. Download, they load up on. When they say it's 500 megabits or it's 1 gig speed, they're loading up on that download because the majority of people use the download. Me, I need the upload because I upload all of these videos. I do all of this creator stuff. So I need both. So I get 1 gig symmetrical, $70 a month. I don't think that's too bad at all, personally. You know, my charter, if I were to get charter at my house, I think it's $40 a month, but I can't deal with the slow upload. I think it's down to about 12 megabits per second. I get 1 gig. That's 1,000 megabits per second. So again, I can't tell you enough about good stuff about AT&T, Webull, Alpha Pix, Seeking Alpha. If you just want to pay me, you know, say you made some money off of some stuff, and you just want to give me a nice little gift, Venmo, PayPal, Cash App, it's all there. It's all there. If you want to join any of our social stuff, it's up there. I will talk to you tomorrow. I may be live with the paid newsletter subscribers on Zoom. That's one of the benefits that you get. So if you sign up, maybe I'm live today with the earnings. Okay, take care. Talk to you later. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.